In tax, an accounting method is how a taxpayer reports income and deductions to the Internal Revenue Service, or the service. The dominant accounting methods are the cash and accrual methods. Cash method taxpayers generally report income for the taxable year it's earned and deductions for the year they make the expenditures. To overgeneralize, in the accrual method, the taxpayer reports income and deductions for the taxable year in which she becomes entitled to receive the income or incurs the obligation, even if she won't receive the income or make the expenditure until later. Normally, the service respects a taxpayer's properly chosen accounting method. Normally, but not always, as illustrated in Ford Motor Company versus Commissioner of Internal Revenue. Before 1980, various parties sued Ford Motor Company for personal injuries arising from auto accidents. That same year, Ford settled these claims. Ford agreed to make payments over periods generally ranging from 40 to 58 years. In so-called Type 1 settlements, Ford agreed to make payments over a specified period. In Type 2 settlements, Ford would pay for the remainder of the claimant's life. In Type 3 settlements, Ford would pay for the longer of a specified time or the claimant's remaining life. Ford's settlement obligations totaled just under $24.5 million. But as of 1980, those payments' present value was, at most, around $4.4 million. For around that amount, Ford purchased annuity contracts. Total annuity payments would equal Ford's settlement obligations. In tax reporting, Ford used the accrual method. For Type 1 settlements, Ford claimed the total dollar amount due as a deduction. For Type 2 settlements, Ford claimed only the amount actually paid in 1980. For Type 3 settlements, Ford claimed the total due for the specified period. Ford also reported the annuity income, and it applied most of the deductions to its 1970 taxes. The service determined that Ford's accounting method didn't clearly reflect income. Accordingly, the service disallowed any deductions exceeding the cost of the annuities while also excluding any annuity income. Consequently, the service determined that Ford underpaid its 1970 taxes by about $3.3 million. Ford challenged this determination in the United States Tax Court. A divided tax court upheld the service. Ford then appealed to the Sixth Circuit.